Hey, on this episode of Rockstar Real Estate Minute, we're going to talk about why 5-year mortgage rates are less expensive to you than 10-year mortgage rates. Hey everyone, so we get this question a lot. Why is a 10-year mortgage rate more expensive or a higher interest rate than a 5-year mortgage rate? And I think the simplest answer is to look at it this way. When you're buying fixed rate mortgages or you're getting a new mortgage that's a fixed rate, you have to look at fixed rates like buying insurance. And the longer you want, the more it's going to cost you. So if you want to set a rate for 10 years, you're going to have to pay a higher interest rate than you would normally for a 5-year mortgage rate. And you'll pay more for a 5-year mortgage rate than you will for a 3-year mortgage rate. And you'll pay more for a 3-year than for a 2-year and so on. That's why variable is kind of usually the lowest. But then fixed rates kind of go up the longer term you want. So just think of it like you're buying insurance. If you want to know what your interest rate is going to be for the next 10 years and you want a 10-year fixed rate, you're going to pay a little bit of a premium for that peace of mind. And that's why the longer mortgage rates are more expensive to you than a shorter mortgage rate. Now there's some kind of bank stuff behind the scenes as well. Banks don't know what the bond market's going to do, so they're hedging their bets a little bit, and they're charging more for the longer rate because they don't know how much money they're going to make on that mortgage over such a long period of time, so they charge a slightly higher rate to you than they do for shorter mortgages. So in general, the shorter mortgage length you get, the better interest rate that you're going to get. The longer mortgage you get, the higher interest rate you're going to pay for it. Hope that helps a little bit. Until next time, your life, your terms.